Hi everyone, welcome to today's video. So on this video, I'm going to discuss about the current situation at the Adani Group, and I will have a conversation around Adani Ports. So this was one of the companies that has not corrected too much after the Hindenburg issue, and even if it has corrected a little bit, it has gone up fairly quickly. Now again, new set of concerns are showing up around Adani Ports. So is this a great buying opportunity in this stock, or should you not be building any positions? Are there other better options? So that is the precise piece of conversation I'm going to have with you. I have no axe to grind with anyone. This is not a push from my side that you go buy Adani Group companies or don't go buy Adani Group companies. Bhai, it's your money, so do whatever you feel like. If you understand this video, then you will understand the macroeconomics, fundamentals, business related concerns around the Adani Group, and then you will be able to make a better choice. So that is the spirit with which I'm shooting this video. If you do not agree with my perspective, definitely put comments. Let other people understand also what the other side of the equation is. So we will study this video from that particular perspective. So just to kick things off, let me teach something very, very fundamental, and that has to do with the concept of holding power. So here is a quotation by Mr. Warren Buffett. He has said that only buy something that you would be perfectly happy to hold if the market shuts down for 10 years. Now, the funny thing is that I don't know if Mr. Warren Buffett has said it. If some of you have his WhatsApp number, send it to me. I will try to message him. Now, I know a lot of scammers will try to put like WhatsApp links. Please do not trust those. Only check the links in the description and comment box. Those are by me. A lot of scammers are just putting random WhatsApp numbers. Please don't trust those. Okay. So anyways, back to the main topic. Let's see what Mr. Warren Buffett has said or not said. That is secondary. But there is a very important message here, which is that if you do not trust a stock, and if you have just purchased it by watching a random YouTube video, either through me, either by any other investor, and you say, "Acha yaar, ye baat hai, theek kar raha hai. Let me just go and buy this particular stock." You yourself do not have a conviction. Then, in simple term, it means that you do not have a holding power on that stock. Now, why having holding power on that stock is critical? There are 2-3 central points. So let me quickly brief that, and then I will touch upon the Adani topic. So in simple terms, holding power means that you have purchased a certain stock. Let's call it X. Now, if you have purchased this stock and suddenly you purchased it at, let's say, 100 rupees, and then it started to fall, right? By next month, it falls to 90, then 80, then 70, and then you start regretting and crying that, you know what, yaar, ye kya kharid liya? कोई रिटर्न नहीं है, स्टॉक मार्केट इज बैड, स्टॉक मार्केट इज गैम्बलिंग, स्टॉक मार्केट में बुरी बुरी चीजें होती हैं, एंड ऑल दैट स्टफ. यू कर्स द स्टॉक मार्केट, सेल योर स्टॉक, गो अवे एंड नेवर कम बैक. सो दैट इज सेड एज नॉट हैविंग अ होल्डिंग पावर ऑन अ स्टॉक. This usually impacts people who do not understand when to buy a stock, why have they purchased a stock, when to cut positions. These are all called as building your fundamentals in terms of stock buying. If you do not understand it, why enter into stock purchasing game to begin with? Go invest via mutual funds, go put your money in fixed deposit, stay safe. What's the point of unnecessarily betting on all this stuff? So in simple terms, before you buy a stock, please understand why you are buying it. What is your sale target on that? Can you analyze, reanalyze your fundamental or hypothesis in terms of purchasing that stock? If you do not have these ideas, please do not buy direct stocks. I run a member YouTube community. I run a course. All these are low cost products. You could consider buying them. Try out करके देख लो एक महीने member community. If you see that it is fundamentally benefiting you, continue it. It's a subscription based model. So you can pretty much check it out. The reviews have been excellent so far. And you yourself will see an impact in terms of your fundamental understanding. So anyways, holding power is extremely critical for 3 key reasons. First reason is that some stocks are deliberately beaten down. Many a times I keep on reading comments that, you know what, it's an operator's game, that operators deliberately bring down a stock and then they aggregate all those positions at like low value and then they sell it at high value. So this stock is being beaten by the operator. Now see, operator are people who have big amount of money lying with them. So definitely this game keeps on happening, that some fake news is run, some incomplete news is run on a particular stock. The stock gets a brutal beating and then the operator or the person with a lot of money enters, builds that position and takes the stock up. So that is a very usual modus operandi. So the word of the day today is modus operandi. Let me know, what does that mean? So that is the modus operandi in the Indian stock market also and in the US stock market also. That that panic is created by using mainstream media. Therefore, having your own brain is extremely critical. So this is one, and this happens very, very frequently. Second is that, see, sometimes fundamentals of a particular industry changes. Let me give you an example here. So for example, up until last year, I was aggregating a lot of stocks like HDFC, AMC. I was also aggregating stocks like NAM India, right? All these AMC based companies I was aggregating. Please check the reports 10-12 months ago. And one of the absolute negative things about the AUM industry was that, you know what, ये सब बर्बाद हो जाएंगी, कुछ नहीं बचेगा इन कंपनियों में. Why? Because there was a market correction that was going down. The mutual fund industry size in a way was shrinking, because in a panic market, people will cut their positions. They will stop their SIP. Panic selling हो जाएगी. People will not build a new position. So of course, the size or the AUM, asset under management of all these companies, HDFC, AMC, NAM India, वगैरह वगैरह, it will shrink with time. So something similar happened in the AUM industry also. So if you understood this fundamental issue, you should have purchased that. I had purchased it a lot. Here is the chart of how much HDFC, AMC run up has happened over the last 1 month, 6 months. Please go and check yourself, and you yourself will see. Why? Because the fundamental issue in the industry was solved. But 10 months ago, go and check the commentary. भाई इतना competition होने वाला है, everyone is entering this industry only. खत्म हो जाएगा, AUM industry बचेगी नहीं, all that stuff. So if you get scared, and the reason why you will get scared is very simple, that you are not understanding the fundamental, what is happening, why is the stock price shrinking, and if the fundamental issue is solved, whether or not the stock price will come back. If you don't have that complete understanding, please do not buy direct stocks. Anyways, point number 3. See, some industries are extremely cyclical. For example, this story right now is going out in something called as consumer durables, that the entire market has moved, but couple of industries have not moved much. One is the IT stocks that haven't moved much. One is the consumer durable stocks that haven't moved much. So what is the reason? Why are consumer durable stocks not giving a run up? Well, it's very simple, that this story started back in COVID. That all these companies, they have a certain inventory to manage. That let's say that Whirlpool starts or sells every year 100,000 washing machine. So in order to build or manufacture these 100,000 washing machine, how much time they would require? They would have to aggregate like copper, wire, all this stuff. And it will take 1-2 years to build this entire supply chain. So they would have been doing this in the year 2020 also, just before COVID, right? So what happened was that in COVID, now no one can go out. People are worried कि यार पैसा बचेगा नहीं बचेगा and all that stuff. So consumer durables witnessed a massive shrinkage in terms of purchases. कि washing machines कम बिकी, right, and all that stuff. घर पे पड़े हुए थे लोग, so सोचा कि क्या करें टाइम पास के लिए, so we'll just wash clothes. So I'm just kidding. But anyways, I hope you got the point that there was a problem of excess inventory when it came to consumer durables. Now, as a result, witnessing this pandemic situation, they paused the orders, all these consumer durable companies, and there was low capacity expansion. Now, there was a lot of pent up inventory demand by 2021. That, for example, all these 100,000 washing machines that were produced in the year 2020 पड़ी हुई है, right, and they are eating up a lot of space at distributor center, at retailer center, all that stuff. So Whirlpool said that, भाई साहब, you sell our washing machine at let's say 15,000. So instead of 15,000, ऐसी पड़ी हुई है, so you know, निकालो आप, right, at 10,000, just sell it, right, somehow just get it out, right? Why? Because electronics or consumer durables also have a certain lifespan. It's not as if कि अजर अमर हो गए, right, कि आपने washing machine बना के छोड़ दी, right, and then that washing machine is staying for like next 20 years. So that is not going to happen. So as a result, there was a lot of discounting that was done. This reflected in operating profit margin, that the operating profit margin went down. So as a result, the results of eventual companies were poor. So this is a cycle problem. Now, if you understand all this stuff, you will have zero problem in terms of building positions on consumer durables. If you don't understand this, you will keep on watching like news, you will keep on watching and every stock price movement, and you will keep on getting stressed and फालतू में आपका BP बढ़ेगा, right? And there is no benefit in terms of doing it. Please understand the 3 central points that I discussed, and based on that, if you have no holding power on the stock, please don't buy the stocks directly. So in that context, let us start analyzing the Adani port situation and more broadly about the entire Adani group issue. So right now, problems have been surfacing with Adani ports, which has been a crown jewel or a top performing company, so to say, within the Adani enterprise or Adani universe. So this is the first central point that you need to understand, that Adani port Ports auditor, which is Deloitte, it has resigned. Now a lot of politics is getting involved into all this, that you know what, Deloitte में कुछ कमी होगी, right? वो खुद ही corrupt company है, विदेशी company है, this that, and okay. So please try to understand it a little bit more. So let me present some history around this, and the first central point that you need to understand is that this is not the first time that Adani Group is facing issues with its auditors. Now last year, and this news comes from UK, and I am quoting the source also, this is from Financial Times, and I will read it out with you. And this news came out post the Hindenburg issue, and let me just quickly read it, it will make more sense. That here Gautam Adani has been dealing with US short seller Hindenburg Research, and it was highlighted in the 100-page Hindenburg report that Adani's use a tiny firm in India as one of its main auditors. And on this they had given a rebuttal saying that the Adani group of companies follow a stated policy of having global big six or regional leaders as statutory auditors. Now basically even in Hindenburg report this thing was there that Adani is not using big companies or big auditors, they are using smaller auditors. But Adani ji said that no, this is not correct, we have not done it. So this news comes from the UK that Adani's UK subsidiary were audited by Crowe UK. This is the 12th largest in UK, right? So it's a fairly small company. It's not like one of the largest in the UK, definitely not top 5-6 as has been claimed. So this problem of auditor or hiring like tiny auditors has been there for a while now. So this is point one. Now point number two is that Deloitte has recently resigned from Adani Ports. They were the auditors of Adani Ports, and Deloitte is one of the top 4 auditing firms in the world, and they had resigned, and Adani management has instead appointed a company called as MSKA and Associates. This is again a very small tiny auditor. Interestingly, they are the same auditors when Deloitte resigned from Byju's. This same company was appointed by Byju's as its auditor also. And we are seeing what situation is playing out there. So anyways, coming to the crux of the issue, why Deloitte resigned? Well, it's very simple. They were saying that, see, we are the auditors of Adani Ports. This is one company. You have so many other listed companies. I think they have around 7 companies that are listed. We are not getting access to the transactions that have happened between Adani Ports and the other set of subsidiary companies. So that has been the primary issue, that Deloitte wanted access to a lot more information in order to present a more qualified report from their side. Now Adani Group is also right. They are telling Deloitte that, you know what, why should we give you access to other groups info, right? You are the auditors of Adani Ports only, so just stick to that. So this is what the point of contention was, and Deloitte resigned. Now comes the natural question कि भाई देखो, सबसे important point is the fact that Deloitte is not a very small standalone type of an organization, and they do not operate by whims and fancies per se. Now if you are a big auditor, then a lot of eyes are on you. A classic case in point is the Satyam story when it broke out. PwC, a PricewaterhouseCoopers, which is again one of the top 4 auditors, it also got embroiled. In fact, people from PwC went to jail because they gave their stamp of approval on reports that were fudged. So for all these big auditors, the regulators keep a very close eye, and in case a big auditor ends up doing some stuff like what PwC did with Satyam, then it leads to a lot of backlash for these big auditors because they have already existing set of big clients. They will lose a lot of business from them. So it becomes a very big reputational risk for them. So if big auditors feel कि यार हमारा तो client कुछ गड़बड़ हो सकती है, they will back out first. They don't want to get embroiled into all this negativity. But on the flip side, with a small auditor, if your biggest client itself is just like, or almost like a 60-70% of your business comes from one client, then that one particular big client might have a lot of influence on that small auditor. So I'm not trying to tell you who is right here, whether it's Deloitte who is right or whether it's the Adani group of companies that is right. I am just telling you what is the game at the back end. But as an interesting exercise, you just tell me that out of nifty 50 companies, there are 50 top companies in India. You tell me how many of them have auditors that are not in top 4 or top 6. So do let me know the answer in the comment box. If some of your auditors, CAs, then you would be able to give that answer in a slightly more nuanced manner. So do enlighten our audience on that. I will try to highlight that comment in the community post. So this is the current turmoil that is happening with the Adani group of companies, especially around Adani Ports. So as a result, the Adani Port stock has also started to fall. And as I'm shooting this video on Monday, the Adani Port stocks continue to fall even today. Now comes the second second key point that see Adani Port is a very good company. It has access to so many assets. It is managing such strategic ports in our country and it is doing so much development. So, ठीक है यार, maybe this fall is a great opportunity to aggregate. Maybe, maybe not. So let me tell you the entire story here. And you can check this entire story by looking at 3-4 points that are there in the open. So let me first and foremost take you to the investor tab here. What you will notice is that FIIs hold roughly as of now 17% of Adani ports. DIIs hold again 12%. They have cut their holding from 16 to 12. Now you will see that FIIs are holding 17%. These guys, DIIs, are holding 12%. So 28-30% तो strong hands में holding है. Very good. Okay. Have you bothered checking who those FIIs and DIIs are? Okay, so let's do that also. So if you delve deeper into this FII holding, you will see that this is GQG and this is also GQG, right? And here is a snippet and a previous video that I've done on this topic about GQG's rationale of buying the Adani group of companies. You can stop the video here, read it, why they have purchased it, watch the video here to get a complete understanding. Now, if you add this tally, the numbers are not adding up. Why? Because this is exactly what is being investigated, that who are the actual foreign investors in Adani group of companies. ऐसा तो नहीं कि shell company बना के you have routed that money back into it. So this is problem one. What about DIIs? Who is the DII? So out of 12.45, there is one single company, LIC, which has invested 9.5. So can you say that Adani Ports is right now being trusted by big players? Maybe, maybe not. It's your call to make. Now let's talk about the second point. Now if you take a look at the compounded profit growth, that if you take a look at 10-year period, 5-year period, 3-year period, the profit has gone by 18%, but 3-year CAGR in the stock price has been 31%. And that has precisely been what the problem has been with the Adani group of companies, that they are commanding higher PE. The rate at which they have gone up and the valuations is what is problematic. So from an investment point of view, you always need to worry a little bit about कि यार आपकी holding power रहेगी if you purchase something like Adani group of companies, because you buy Adani Ports today and if it falls by 10-15% tomorrow, will you have the ability to continue to hold it? If the answer is yes, go ahead and purchase, no problem there. If your answer is no, आपको पता ही नहीं चल रहा है कि why is it falling, कुछ नया information आ रही है, कुछ नई चीजें निकल के आ रही हैं, then it becomes a slight issue. So please be considerate about that holding power. That is where we started this entire story about. And now let me talk about the third and the most prominent issue or the fundamental problem with generally Adani group of companies, and this has to do with the cost of capital. Now very few people are speaking and noticing this. See, cost of capital in very simple term means, right? So for example, let's say that you're going and trying to buy a house. Now you do not have funds. You require like 1 crore rupee to buy this house. And let's say that you are able to get entire money on loan, hypothetically, and you get a home loan interest of 10%. Then what is your cost of capital? It is 10%. So in simple terms, cost of capital simply means that what is the rate at which you are getting your capital. So in simple terms, I am helping you understand it. Now corporates like Adani Group, Reliance, Vedanta, all these different groups, they also have a weighted average cost of capital. Weighted average means कि इसमें debt भी होगी, equity भी होगी, इन सब की मिला मिलू के it comes out to be 11.5% for the Adani group. Now why is this 11.5% a worrisome figure for the Adani group? Let me quickly take you to that. Now here what you would notice is this, that this is the return on capital employed. What it means? It means that they are borrowing or their cost is 11%, but right now they are able to make only 9.61% return on this borrowed money, which is not a very healthy return on their capital. Now combined with the fact that if you feel that the PE ratio of Adani Ports is high or some of the Adani companies is high, then what can happen is that see, if this ROCE falls or if it does not improve, forget about falling. If it does not improve, then at one stage you are paying more money out because that the cost has to be paid out, weighted average cost of capital, and you're not able to make more returns. And this is the reason why almost 4% of their company, Adani Ports, is right now pledged. So this is the precise problem, because right now they are getting capital at 11.5%. Now as per this particular graphic, you can see that many companies are witnessing this high debt, high cost of capital problem. Majority of this debt, now this is not applicable to Adani Group, maybe not, I could not find the numbers when exactly Adani Group's debt is going to mature. most of this debt is going to mature between 2025, 2026, 2027, 2028. So that is when fissures could erupt. So please be considerate, not only about Adani group of companies, but about any company which has high debt in general. So very quick third point about the story, that SEBI is right now looking into some of the allegations that were put in the Hindenburg report. Supreme Court had created a bench and it had given its verdict, so to say, and it had instructed SEBI to look into it. SEBI said that, you know what, there are areas we can't look at. And now SEBI is saying, and I'm reading it out so that I'm not wrong here. SEBI has recently said this, and this news is from 14th of August. SEBI has made substantial progress in Adani Hindenburg case, right? And they would seek 15 more days to submit its report. So this news came out on 14th, add around 15 more days to it. So 29th ke aspas, there could be a big move on Adani group of stocks in general, including Adani Port. It could very well go up, it could very well go down. I am not taking and trying to tell you the point that Adani Ports will definitely go down or Adani group of companies will definitely go down. All I am simply telling you is to judge this entire story from a holding power lens. If you are of the point of view, yeah, Adani group of companies are going to give like massive returns, क्या फर्क पड़ता है, लगा देते हैं पैसा, this, that, okay, do it, no problem, right? But have the holding power that in case on 29th, if something off comes, and you understand all the fundamentals, and even if the stock falls, you will continue to hold, definitely go and buy it, no problem there. But if you are from the other side of the story, which I am from, to be honest, I would use my rational mind. I will say that 5,000 stocks are there. Why do I need to run after this stock where my holding power is damadole? I would rather go and pick some simple stuff. For example, I will pick consumer durables. Already pite hai. Cycle is there to support you as of now. I'll pick IT stocks. IT stocks, since the time I've been speaking about it on the member community, it has already given 8-10% run up. Huge amount of capital I've already invested. Why? Because it's a sentiment play. That a lot of negative sentiments were there. अब आप सुन रहे हो कुछ IT में problems आ रही हैं, this that हो चुका, right? I mean, it has already happened. Whatever negative had to happen with IT companies. Of course, some new news can come and it can fall, but it is already trading at 25-30% discount. That's an index. So how much loss will you take on it, right? So this is point 2. Point 3, if you want to take little bit more risk, not like crazy amount of risk, but little bit more risk, you could consider investing money in something like blue chip banks. For example, HDFC Bank ho gaya, Kotak Bank ho gaya. All these are very good levels. Highest ever profits, highest ever sales, clean management, auditor का कोई issue नहीं है. Haven't given a run up for the last 2 years. They are about to give a breakout. When exactly, I can't write it on a stamp paper and give you. Maybe it will take 3 months. Maybe it will take 6 months. So yeah, please understand the story from that perspective. If you are a little bit more adventurous, that okay, मजा नहीं आता 15% CAGR से 15-20% CAGR, who cares? I want like more CAGR. Okay, then go and look at some good small caps. Again, I will make all the announcements in my member community in case you are interested in learning things fundamentally, how to avoid unnecessary risk in the market. Do consider checking it out. Do consider joining it. Try it for 1 month. You yourself will see the benefits. So in summary, point number 1 is that there is high risk associated with Adani group of stocks, including Adani Ports. Be careful. If you are of the viewpoint that you have massive holding power on these stocks, by all means, go ahead and invest. But the risk profile is fairly significant. Number 2, the risk reward equation for other 5,000 stocks or many of those 5,000 stocks is much more sensible. It's easier to bet on very simple bets right now, which are still at a discounted play. And as the market goes from 19,500 to 21,000, you are likely to not lose your money on those bets and mostly aapka bani jayega. And you will make decent return on that. Third and final, it is not my push or neither am I trying to prove that Adani Group companies will go up or whether they will go down, whether they will survive, not survive. Those are all speculations. Adani ji is doing wonderful work. But as a sensible investor, I am mitigating my risk. I am not taking unnecessary risk with high debt companies, especially in a world where volatility is going to be fairly high. So we need to understand the macroeconomics and then apply our decisions. In case you want to understand this aspect more, how prices impact you and how prices impact the stock market, do consider checking this video on inflation, where I have fundamentally taught everything, what inflation is like, how it actually moves, who is responsible for high inflation in the world today, and how it is going to impact the stock market. I hope you enjoyed this video and I will see you soon.